What's going on, everyone? Let's talk about my 5 daily habits to help become a millionaire. Now, this is my opinion, and I am not a financial expert, so these are the habits I built up to help me become a millionaire.
Rich get richer, the poor get poorer. Why? It's because the rich think about wealth and affluence all the time. And what do the poor think about? The poor think about lack, loss, and limitation, risk, danger, fear, failure all the time.
And a path to becoming a millionaire is not glamorous, but it also is out of reach for the average person. A self-made millionaire and a founder of a few companies. I claim financial freedom at the age of 34. So I don't have to work, but I work continuously now because I enjoy it. And I want you to be able to do the same. Now, what are some of the habits I did? And this is the thing, in this video, I'm going to tell you some of the habits I did. Maybe it won't work for you, maybe it will. But at the end of the day, it worked for me. And I'm just trying to help you understand some of the habits that I had whenever I became a millionaire. And the first habit I had was tracking your spending and net worth regularly. I didn't have to check it every month, but I track my spending every month.
Poor people check their salary. Rich people check this. And that's the wealth difference nobody talks about. Most people only track what they earn, but rich people track what they own. Your salary is not your wealth. It's what's left after you spend, save, and invest. They look at net worth, assets, liabilities, savings, stocks, real estate, business equity.
And I track my net worth yearly so that I can see if I'm making step to the right direction. So every month I'll pull my bank statement, and at this time my bank statement had already what I was spending on. And what does that mean? It means it categorizes it for me. So I know exactly how much money I was spending in each category. And this helped me build my wealth and keep me living below my means. So this is where I took my time to understand I don't need to spend this much on X, Y, Z, and I can use it for investment. Now, tracking my spending also helped me track my investment. So this is where you need to understand. You need to invest. And network may sound like something only celebrities think about, but everyone should assess of any kind of expenses and liability has into the net worth. So to determine your net worth, let's talk about this. You need to access any of all your accounts, your bank account, investment accounts, your retirement account, your certifications of deposit, the value of insurance policy and annuity. And this also can include real estate, material possession, and art and other collections.
You got to know where you're at financially.
You got to know where you're at. And it can also serve as a dashboard for achievements and do-betters. Oh man, it's so great. I finally crossed up. You know, a lot of people, they celebrate getting to zero net worth. That's a big deal in the world in which we live today. And then, oh, I crossed $100,000 net worth. I crossed $1 million net worth. Or, ooh, I noticed that my debt went up a lot from last year to this year. I bought that car. Was that a good decision? It will highlight those areas, those decisions that you're making.
So your net worth is almost all your assets. Now, what is your liability? Your liability is debt, like credit card balance. Loans, this can include student loans and or homes, depending on if you're upside down on it, and bills and expenses. All these things are things that could be used against it. So if you don't understand net worth and what it is, it's your asset minus your liability. And here's a video of one.
Net worth is what you own minus what you owe. It's the total value of all of your assets, your house, your cars, your investments, your cash, your collection of Bob Ross originals, minus your liabilities. Things like credit card debt, student loans, your mortgage, and the remaining $2.82 you owe a firm because you buy now, pay later a case of Coke. It's a real thing, and I wish it wasn't.
The second habit I did to build my worth was increase and diversify my income stream. Making more income is the first step building wealth, but puts you on track to become a millionaire.
So for you, you probably should start thinking about some side hustles, some contract work that you could do to diversify those income streams, at least building up the skills. So if you needed to, you could go find more income, at least have the skills to do that. The one thing they can't take away.
Financial expert actually tells you side hustle bring extra income, everything from freelance, Airbnb, and everything else can make you grow your wealth. So you need to understand this. And this is a big thing why you want to diversify your income. You're not too reliant on one income. You lose your job, guess what? You don't have no more income. But if you have a job, you have a side hustle, you do Airbnb, you do drop shipping, whatever you want to do, you're gonna end up making yourself better off. And with extra incomes, meaning more you can invest in other businesses, stocks, bonds, whatever you want to do to bring in more money, this is where it helps out. When you get more money, it's easier to diversify your income because you got more money to spend on different stocks, to buy real estate, to buy part of a business, or even start a business. Number 3 habit I took advantage of tax advantage account. I have a 401k, I have a Roth IRA, I have an IRA, I have an HSA account, and I typically got a return between 12 to 18% every year on my stocks. And yes, it depends on how well it does that year, but I've consistently been getting about 15% on my stock portfolio. And that is for my 401k and retirement account, because I mainly invest in mutual funds and index funds that low cost, and that's what I invest in. At the end of the day, how you want to invest your money and how do you want to save money is all based on why take advantage of this. Well, you're gonna get an HSA account, and that's a health saving account. I use that for my wife and kids, so it saves me money. I have a 401k, a Roth. All this lowers my taxable income. And what is taxable income? Well, here's a video of what's taxable income.
What is taxable income? Explained. What if one simple mistake about your taxes could cost you thousands of dollars? If you think taxable income is just your paycheck, you're about to be shocked. Let's reveal exactly what the IRS sees as taxable income and how to protect your wallet. Number 1. Taxable income is all money you earn. It's not just your paycheck. It includes side hustles or online sales. Number 2. Earned income comes from active work. This includes jobs or freelancing. Unearned income is money like dividends or rental payments. Number 3. Unexpected things count as taxable income. Contest prizes, gift cards, or bartering deals must also be reported. Number 4. Some incomes escape taxation. These include gifts, scholarships, and life insurance payouts. Number 5. Deductions lower your taxable income. They significantly reduce the amount of taxes you owe.
Now that we finished talking about all these what's a taxable income and investment thing, this is what I'm telling you to do next. And this is my 4th habit, is invest consistently no matter how little it is. When I started investing, I only invested $20 a month because that's all I could afford. But then I slowly started bumping it up year over year. Now it is about $2,000 to $3,000 a month I invest in the stock market. And this is something I did over 10, 15 years. But when I first started, it was $20 a month. It's not much. But that's what I did. And over the time, I didn't try to time the market. I didn't try to do anything like that. I consistently invest. And that's one of the biggest things that helped me become a millionaire, is to consistently investing and riding out the market, no matter how good or bad it is. Because at the end of the day, no one's good at timing the market. And The last thing I did was living below my means. So probably nobody sets out to live above their means, but at some point lifestyle creep happens. This is where it's gonna steal your wealth. This is where you buy the fancier car, you get the bigger house, you get the nicer things. And not knowing when you buy the bigger house, the electric, the water, the maintenance fee costs more. This is where you get the Lexus, BMW, the luxury car, but then the maintenance costs more. All those stuff you might not even know is slowly creeping up your lifestyle. And at the end of the day, it's okay, but at what cost? It's the future investment. So this is why I said live below your mean and watch out for lifestyle creeps because it happens to everyone. I was able to live off of $50,000 a year and save everything above that in a retirement account, in a health savings account, into real estate. And that's what I did. I did that for 10 years. If you make $100,000 and for 10 years and you invest $50,000 every year, that's $500,000. That's just straight up the numbers. So that's what I did. That's how I got real estate. That's how I got XYZ. Now, did I lighten up and start moved up my lifestyle now? Yes. But at the end of the day, 10 years I sacrificed only live off $50,000 of my income. Now my wife's income, she spent it on her things, but my income I kept it at $50,000 and then I spent the other $15,000 on investing for 10 years. So that's my 5 habits. Like and subscribe to my video. Hopefully some of these habits help you so you can be wealthy in the future too.